JP Morgan loss is now estimated closer to $9 billion, as increased from initial disclosure of $2 billion. Futures point to a lower open as uncertainty grows in the Eurozone. I'm Taylor Schranz, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the morning call. Scott, we're taking a look at the futures, and I think they're taking some of the news relatively in stride. You have more EU uncertainty. You have the big JP number, Morgan, that came out. $9 billion is a lot of money for that loss, but I think the futures are taking it relatively in stride.
I think when we woke up, the futures were down like 7, 8 handles. Right. Now we're down like 4 or 5. Right. It almost feels like the market's getting a bit numb. You know, we've been seeing so many headlines out of Europe that are so disappointing. Today, you see Spanish yields above 7, markets bracing for its, the Italian auction that probably won't go over too well. And then, recently the hopes have been diminished, at least, about the EU summit. So I do think that, some people are like, okay, as long as there's nothing drastic out of there, market's holding in stride. But I guess if nothing really gets done and reality sets in, it's going to be hard to hold these levels.
But even like we said in the Morning Call Express with JP Morgan, even though $9 billion is a huge loss, is that taking more uncertainty out of that number? Like more that what if is coming out?
It could be. And if you remember, the first time it came out, it was surprising. Stock got pummeled. If you go to the chart here of JP Morgan, look what happened when the first $2 billion loss came out. You had a gap down because it was surprising. You had 2 days worth of down movement, and then we went all the way down to 30. Then they announced the $4.2 billion. So people are like, okay, maybe they took the loss. That's great. That was a reversal day. I think we were right here and said this is a day that we could bounce and it'll help the market. And then since then, you've had a nice methodical up move. Okay, it bounced, it held higher, it continued up to this gap, couldn't get through there right away. Goldman Sachs upgraded them. Remember that? I think that was right in here. And then PS, yesterday it closed really strong, probably baiting some traders in to be long, and then you have this surprising news. So I would say write down support 1, 2, and 3. So for JP Morgan, we're spending time here because I think it's important. Yesterday's low is 35.50. That's, I think, where we're opening right now. So if it holds 35.50 and starts to go positive, you're going to see a lot of strength come to the banks. So they're going to be like, if $9 billion loss can't bring down the banks now, it's priced in. If this doesn't hold, I don't think it's that big of a deal. I think this is the line in the sand, short term, right around 34.60, 34.60. If we don't hold this and we hit this today, it'll be interesting to see if they actually only even isolate it to JP Morgan, because they think it's a JP Morgan problem, which I think it's a lot bigger than that. But those are the two levels that my traders will be watching today.
All right, and speaking of levels, let's take a look at the overall market. We have jobless claims, GDP, and of course that all-important healthcare decision with the Supreme Court.
Yes, and like you said, I think we're down like 4 handles, and after a 2-day move, 4 handles is not that much.
Right.
People probably would have thought we'd be down 8, 12, 14 handles. People were tweeting all morning long, like almost like the world is going to fall apart, and then you come in, maybe Big Ben didn't start his July 4th holiday weekend, so he's in here buying some futures. But anyway, if you look here, you'll see on the chart, it's been pretty calculated. Ever since the reversal we saw when we took back the 200-day, you had this big move all the way back to retest 1360. 1360 was your sell signal. It was your reduced longs as we retested the old neckline here of that head and shoulders top pattern, and also just made sense. 100 handles off the low. Then, that Thursday after the Fed, pow, potent down move, had some follow through. So right around 1310, it made sense to cover some shorts considering you just had a 50 handle down move and also test some longs. So at this point, you had your 2-day move. I would say micro support for us to continue to stair step higher is right here. This is the low of 1320. If we hold 1320 and absorb the headlines the next 2 days, then I think shorts would be a little scared, because if we start getting above this 1335, 1337, it'll negate a lot of this downside power that we saw last Thursday. So, again, trade against 1310. 1310 continues to hold. Don't have an opinion and just follow the market action.
Okay, guys, we are coming to the end of the quarter tomorrow, so we're going to check this sector. Check the temperature of the sectors, and we're going to kick it off with the financials. XLF, 8 of the 9 major sectors that we take a look at have essentially retraced back to their March 31 highs for the most part, which is no surprise if you take a look at the overall market. But let's see if XLF sort of looks like JP Morgan does.
Did you say 8 of them?
8 out of 9.
All right, so this one is actually not one of them, but or close. So the XLF, which is no surprise because the banks, have been a weak spot, and every time they're in obsession or they're pressuring the markets can't bounce. So now that they're off the lows, they're not as spoken about. We'll see again what happens with JP Morgan. If you look here at the XLF, you will see Same day that JP Morgan bounced was the same day the XLF bounced. What a coinky dink. You know, it showed a little bit of power. You had a big move. You know, then you had your secondary move as it held higher. And now it's kind of in no man's land. I would say resistance to trade against is right here. You know, this is your high of about 1463. It's probably going to open up a little bit lower with, you know, the JP Morgan news, but I would think as long as it stays above this 1390, above the 200-day, it won't be a huge headwind. But again, be very selective in the banks. There are so many better groups out there. You know, just continue to be a little bit more skeptical there versus being in anything more than a tier 1.
Moving along to consumer discretionary, XLY. I'm actually kind of surprised by the strength of the consumer all year. I mean, you're wondering if they're just not paying their mortgages and putting it into retail. I mean, I realize it's an unreal simplistic term, but again, this is another group that's had a pullback just like we've seen over the past month.
Yes, a lot of people are living rent-free and mortgage-free, but they're buying goods and services because the banks can't get them out, which is too much regulation. But anyway, if we look at this group, you know, this group has acted well. I wouldn't say lately it's been showing some crazy leadership, but if you look at the chart here, it's in the game just like the S&P. If you look, you know, way back when you had this uptrend that was just intact, you know, broke it a little bit right there. Okay, then came back, retested, couldn't get above it. You had your little flag, and then you had your correction. So now we're off the lows. You know, it's above the 200-day moving average. This day from last Thursday is still controlling it, but you know, it's almost negated with the power. I would say at this point, you know, it's in line with what the market's doing. It's not outperforming. It's not a problem spot. You know, you do have defined support here, you know, right around 42, 47. If it were to pop with the market, you know, and get through this high here of 43.40, you know, you could see some continuation. It doesn't look that exciting to me. Okay, let's move along to the tech ETF. I'm kind of excited about this one because you and I talk about tech a lot. We have a lot of these cash-rich companies. Their balance sheets look really good, really been firing on all metrics. There's not that many severe, horrible spots there. In fact, there's a rumor going around, or speculation, that there's an ETF that might come out that focuses on dividend-paying tech stocks only, which I'd be really excited to check out. Yeah, that would be actually really good. A little bang for the buck. You get growth and you get dividends. So it also probably would help a lot of the mega caps are the ones that have been doing that. Right. So if you look here at this sector, I don't see anything so great here as well. You know, it looks just like a lot of the other sectors. You had your move off the highs, you know, held above the 200-day. You had a methodical bounce. You know, maybe it penetrated a little bit higher than some other groups. Then you had, you know, this bearish engulfing bar like we saw in a lot of the stocks and a lot of the areas in the market last Thursday. And since then, it's had a 2-day bounce. This 2-day bounce, very, you know, not so spirited in my opinion. So at this point, you still have to be very, very, you know, selective in tech. You know, the cloud computing area has been a little tough. Networking area has been a little tough. Even high beta has been mixed. So, you know, you still have to pick your spots in tech because it's not just, you know, throw a dart at the wall and anything's going to stick.
I think we're also in that seasonally slower time of the year for them as well. Moving along to healthcare, guys, this is going to be an area you really want to pay attention to today with the Supreme Court decision coming out regarding Obamacare. So names that are really going to be highlighted here are your managed care names, your UNH's, Cigna's, Aetna's, WellPoint's. But let's take a look at the ETF and see how it's performed overall.
Yeah, unfortunately, this is not a spot I focus on because I look at the chart and I just see so much relative strength. And you know, I probably should be, you know, I'm an old dog sometimes and I need a new trick. And if I were trading these names, I probably would be making more money. But if you look here, you will see that, you know, look where this is. Look how close to the highs of breaking out. You know, you didn't see much of a correction here. And then when it did correct, it bounced back quick. If you take a closer look at this chart here, you'll see here as you move off the lows, held higher, just like the markets, and then it crossed above resistance, and what did it do? It went right back up to almost the old highs, and then it held higher again. So I think this ETF or this group is built, has very, very big expectations that it's going to get its favorable ruling for whatever it is the market wants to see is favorable. So if it's, you know, if it starts breaking above this area here, which is about 37.31, you could see new highs. But at this point, you better make sure that those expectations are met because it's pretty much priced for perfection. Right.
Moving along to the XLU, the utility ETF. Now, I know we don't really look at these names. They're not that sexy. They don't have as much momentum in them. But this has outperformed the market relatively since April. These are the names that people go to in times such as this with a lot of uncertainty because they're defensive and they pay those consistent dividends.
Yeah, this one looks like it's just slow, methodical, and okay. And sometimes slow, methodical, and okay is a way to be safe. And if you look here, again, they don't move. It's not really sexy, but above, well above the 200-day, above the moving averages, near the highs. I'm sure the stocks in there are showing a lot of relative strength. And before we wrap it up, I just want to throw one more in there because we were talking about before. Well, energy and the RTH. The RTH, because we've spoken about the RTH so much this year. And yesterday I saw some faulty names in a lot of the high beta names in retail. So, if we haven't seen a bar like this, look at the potency of this wide range bar to the downside. We saw one right here, but it's still not as strong as this one, in a long time. So I take a little bit of notice, and if you look right here, you will see that it hasn't even been able to take back the bottom percent of it. So as long as the RTHs, stay below this 42, I do think that some stocks in this group might get some money rotated out of. Same way you saw money rotate into your ags in the last 2 weeks. It's got to come from somewhere, and right now retail is showing me some faulty signals.
Quickly, let's wrap it up with energy. Even though the group moved up 2.2% yesterday, its largest move in 3 weeks, it's just been completely crushed due to the price of oil.
Yes, and what I think guys want to see is, same way like the ags were somewhat out of play the first quarter and change, and then all of a sudden they ignited, and you had like a 10-point move in your mosaic, and you had big moves, off the lows, which was great tactically. People are trying to think, can that happen in this group? Because oil's been so crushed, and in a normal world, you probably could buy oil below 80 bucks, but chances are if it doesn't hold 75 to 77 in an unnormal world, which the headlines actually, make me believe sometimes, you could see 60. So anyway, you look at the OAHs and you see a decent 2-day move, or actually, sorry, the XLE. So here's your low, a nice move off the low. The question is, can it beeline up to bigger resistance? So I think you need to watch levels. You need to see what's cooking here. And at this particular point, here's big resistance, 65, and here's midterm resistance. If it can now hold above a little bit and show some power, here's resistance 1, and then if it goes sideways, perhaps you go higher. Because I want to show you with your move, it was unbelievable. You had the move off the low, and then you had continuation, and it still looks high. Like no one really expected to get through here, and here we are, going through another resistance and heading, even higher. So if the OAH does this type of move, you're going to see big moves, and obviously the stocks within your agricultural group have just been, on fire the past week.
The next 3 to 4 weeks. Actually, going through July and August, you're going to see a lot of movement in those names. So, I mean, if you take a look at it, guys, all the sectors are really indicative of a highly correlative market because they're just performing literally in step as the way the S&P has been performing. We're going to take a quick commercial break, and when we come back, Scott and I dive into the trenches.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the Morning Call. We're going to dive into the trenches and take a look at the tablet group. And you know what, guys? This has grown to an $80 billion industry in just a few years. Yesterday, Google came out with their announcement of the Nexus 7, a 7-inch tablet with the price point, as the Wall Street Journal reports, at $199. So we're going to take a look at names that are going to potentially move around this. But Scott, let's kick it off with Google.
Yeah, Google right now, I think people were pretty excited because the Droid actually penetrated a little bit into the phone market with the iPhone. So like, okay, tablet's coming out, you got to respect it a little bit. It came out, Google had a small little micro 3-day move off the lows. Wasn't that spirited. It didn't really brush back the shorts, and it didn't change the complexion of the stock yet. We came in this year with very high expectations of Google. They missed 2 quarters in a row, and technically it's been almost more of a sell than a long. If you look here at the chart, you will see we just had a move, which if you look closely, nothing so huge. Like what was this? The little 2-day move into one of the moving averages. You still have this lower pivot here. So, but we've seen lower pivots used as nice tactical longs if they break. So if this were to get finally above this, just say 580 with some kind of force, you could see at least a trade to retest up to the 200-day, which is around 597 for a trade. But if we cannot do this, okay, and if Google comes out with another, I can't say the word bad quarter, at this point, it's been very, very weak. And obviously macro support takes a lot of pressure to break through. But again, if they disappoint once again and this 557 gives way, you really have no huge support all the way down here to 480. So out of the high beta tech names, this one has been a laggard and more of a sell than a long so far.
Right, so far. Moving along to Apple, obviously we have to take a look at that to see how it reacted off this news. And I don't know, I think it'd be really, really tough for Google to break into that market and really penetrate in.
Well, you have like 2 different thoughts now. One, if the economy's slow, all right, then maybe people will start saying, I'm not going to buy the high-end tablet because Google's is good enough, and so is Amazon's, and so is Samsung. But it hasn't happened yet people say, I want the premium, I want to be the cool guy with the you know, the iPad, which I have the iPad, my wife has it, I think my son has one. I have it all too. So anyway, you know, so no one's really penetrated, but it's also like when you have a block and there's 2 restaurants, it's crowded. If you have 8, it doesn't take away from each other, just brings more traffic. And like you said, the tablet market is huge. So if you look at the chart of Apple, it's been very lethargic lately, I have to say. You know, this was the move off the 100-day that somebody took the chart out because I wasn't here for the recap yesterday. Anyway, it's been like just like slowly going up with little trades in here and there. At this point, you know, the range is getting pretty tight. You know, I would say short term, if it was to start to get above finally 577, maybe it could make another attempt to get through 590. I don't think we get through 590 until earnings. It seems like that's formidable resistance now. Hopefully they'll be fine. You know, but you do have this like ascending channel that it's been following. And you know, if you don't get a good earnings report, you can see it, you know, potentially break to the downside. So for now, as a macro investor, stay the course. It's giving you no reason to get out. As an intermediate trend trader, if you bought it at like, you know, right here one more time on the chart, right around when it broke above this 543, you've had no reason to get out. But that as an active trader, you know, you've just had to micro scalp because you're not getting much more than that.
All right, moving along to Amazon. There's a lot of concern here that this is going to be closely competitive with the Kindle Fire. Yes, in terms of size and price point.
Exactly. So that's why I think when it came out at first, you know, Amazon was getting hit because like, oh no, same price point as Amazon. It's not competition for Apple. It's more for Amazon. And then it actually held in there very well. I think Amazon, you know, is kind of in a world of its own right now. Last quarter, they finally had a good quarter. You know, gapped up. You know, slowly, methodically pulled in. Woke up right here on this wide range bar. So for those who are looking for a reversal pattern into the gap, found it right here. And since then, it's been technically acting well. You have a higher low, higher low. You've had actually a few nice little tradable flags where you could have bought it here. You know, you could have bought it again the other day when we listed it. You know, but in order for it to break above these highs here, you know, you're going to need A, a strong market, and you have to let momentum happen, and B, you know, probably another good earnings report to show some consistency, to show 2 in a row, because in order to make new highs, you need to have good earnings. And finally, you had one report last time. They go with another one. This thing will be above the highs here of about 240. So right now, it's Amazon's ball to lose because right now the bulls are somewhat in control. All
right, and let's wrap it up with Microsoft. This is a really interesting name. We said this last week. It's not something you've always traded in terms of momentum, but what I find interesting from the fundamental side, it's typically earned its revenue through licensing, and you're seeing it transition more into an Apple-ish type of company, getting more involved on the hardware end, you know, breaking into that mobile market, or trying to anyway, and with its tablets as well. So I'm kind of curious to see how this plays out. Over, you know.
Yeah, you could, they're trying. You know, but remember the Zune. I don't think anyone has that phone. I think it's, you know, whatever. It's a paperweight, but and it's a historic paperweight. And I think it only came out like a year or two ago. But anyway, you know, Microsoft this year changed character no matter what they've been trying to do. The chart showed you that earlier in the year. It broke a descending trend line. It's been in a multi-year lower base. So finally, if you look here, this is when, you know, we talked about it on Bloomberg. It traded above this 26 and change, got frisky, gave you a really nice move. And then since then, you had your move back to the 200-day. This was your Bible area. Right now, it's kind of in no man's land where it's like, it's not on the 200-day. It's not near the highs. It's somewhat flagging right here. So I think if you're long Microsoft, just stayed as a trade. Let's see if it flags again here. And then once we get into maybe a better market later this year, above 31, it can continue to get back to the highs. But for right now, I wouldn't be throwing any new money at Microsoft. I just think that it's hanging in there and you could stay with it as a tier 1 mega cap long.
All right, well, I'm curious to see how this plays out. Moving along to quick hits for some quick cash, we are going to kick it off with eBay.
Yeah, eBay's been one of the chosen ones. It broke out above 41.60. You had a nice 2-day momentum move. It just pulled back to retest that area. If you want to take a quick look at the chart, you will see it's starting to flag again. I think this can give us some signs here. It's holding this recent breakout, which to me is healthy. You know, in this market, you have to have high-level stops. I think if you're uncommitted, put your stop here at 41.40. If you're looking for momentum and if the market starts to gain some strength and they like what EU has to say and tech has leadership, this should make another move. But for right now, stay the course and just make sure that you know, it doesn't have faulty action up here.
All right, moving along to Netflix. This company going to U.S. lawmakers to block cable providers from stunting their growth even more. I just saw that this morning come out.
Oh yeah, this stock it just shows you how you need to watch how the complexion changes. And every day, I think my traders were trading it from December all the way through the first quarter, and it went up huge, right to our targets of like 120, went a little bit above whatever, and then since then it's just been a bleed. So if you look here, it just shows you how it's like the tale of two tapes. This is when it ignited from this lower level, and look at this move to 130, and they say you can't time the market from 70 to 130. That's a lot of money. Okay, and then now it's just been high, lower high, disappointing gap down, and then it's been trapped in this range. I think now if you're not involved, it's a little bit more interesting, not as an investment, but for cash flow, because it is heavily shorted. So down here, maybe it can come to life one more time. So I think traders are watching to see for some quick cash. If it can get above 69.50, or what's this peak here? This peak here is like 70.50. So 69.50 to 70.50, if it has huge volume, I mean, it has to have huge volume. Maybe you get a move back, at some point, back to 80, but then I wouldn't expect much more than that. We're not getting a move from where we saw, 70 to 130 anytime soon.
My God, if that's not like a textbook chart of why you have to understand how to invest long-term, whether you're long or short, and know how to trade the momentum in between, almost like our ags. I mean, that chart completely. Moving on.
Tells the story.
Moving on to Chipotle. See, why am I losing it? CMG.
CMG. Yesterday, all of a sudden, out of nowhere, it just started trading lower. And people are like, what's going on with CMG? What's going on with CMG? And then, there were still multiple reports on what was going wrong. And I don't think anyone really pinpointed it. But sometimes you have to look at the price action first and ask questions later. And, it gapped down huge. And if you look at this chart, you will see a few different things going on here. And you got to be a little careful here. You remember when Netflix broke 260 or 320 and it changed character? This is one of those stocks where, it's great when it's in its pattern and it's following an uptrend, which it did for so long. But then look what happened here. It was in this upper area, failed right there, potent down move, sliced this uptrend that was intact since early or late November, and then made a high, couldn't get back above it. And now that you have like this channel here where we just had a potent down there that probably scared the Jesus out of people that are still there. And at this point, if it can take at least a third of this back, meaning that it was an over-exaggeration. So if it can't get back to, say, above, what's this level right here?
Was there some legislation speculation or something?
It was legislation. It was growth slowing, and maybe the ag news with corn, maybe some of the tortillas are getting expensive. I don't know. I'm saying that's what goes around in the market.
Input costs are very important. That's why a lot of these Abe's Craft, all of them have taken a hit because of input costs.
So Panera go down. Even my Dunkin' Donuts got a little hit yesterday. But anyway, big potent down move. Look at it one more time. So, this just engulfed this entire range. So if it doesn't get back above this like 400, 410 soon, I think some traders are going to be looking to short it through this area, especially if the market gets a little bit worse, because if you look at the monthly chart of where this came from, look where it is. Whew, wow. Has a long way to go. So I know if you made a gazillions of dollars in this holding it, just make sure that trends do change. And let's take a look at what this one looks like. Not saying it's getting close, but this accelerated trend does come into play here, and why not be able to see a move even to retest this 346, which would be about $50 lower from where it is right here. So just don't fall asleep on this if you've had too many carbs and you're feasting on the gains because you have it for lunch in the stock.
No red dog reversals or dead cat bounces on this one?
No,
not yet.
Just feasting.
All right, let's wrap it up with Goldman Sachs.
Goldman Sachs. It's been a weak stock. It's been a weak bank. There hasn't been many headlines about Goldman lately. It's been all on JP Morgan. But overall, the stock's been somewhat broken. And they tried to trade through 90.60, which is big term, longer support. Same way a lot of the macro support held in a lot of stocks because we just came down a lot. So we're bouncing off it now. We need to judge this bounce because technically this stock doesn't look good in my opinion. If you look here at the chart, let's go back to the daily chart. You saw a decent bounce off of this double bottom. So as of right now, short-term controlling it, 90.70 is a double bottom. You had a decent bar yesterday to fill this gap. So some guys made some money trading it. But if Goldman Sachs can't get away and can't get it back above this area, and just hovers down here after this move showing no buy demand. Later this summer, if the lows aren't in, you're going to see this one lead us down. So it'll be probably a good short below this 90.40, 90.70 if that's the case. But trade it long versus tactical area. But if it doesn't get going, I do think that it is prone to what could be another move down. And the next level underneath this right here is 86.90, and then really the low 80s.
We should spend some time on the financials in our sector spotlight next week. We have a lot of opinions on this one. Anyway.
Or at the beach for July 4th.
There you go. There you go.
July 4th
at least I don't miss you next week because Wednesday's not my day. Yes. So there you go. Happy 4th of July, everyone. Anyway, catch Scott at the end of the day every day on Real Money, Options, Profits, and T3Live.com as he wraps up the charts for us.